Hi everyone, my name is Dean Aita and I'm a certified financial planner and financial consultant at CCR Wealth Management. If you rely on your income, this following presentation is for you. Disability insurance pays a portion of your income if you can't work for an extended period because of an illness or injury. So who needs it? Even though the chance of missing months or years of work because of an injury or illness may seem remote, anyone and everyone that relies on a paycheck, and especially if you have loved ones who depend on you, should have disability insurance. Without it, a bad accident, loss of vision, chronic condition, or illness could cause financial hardship. Even a temporary disability can cause you to deplete your savings, fall behind on bills, and rack up debt. Well, May is National Disability Insurance Awareness Month. And as a financial planner, I strongly encourage you to consider how you would make ends meet if you were unable to earn a living due to a disability. In this presentation, I'm going to focus on an integral aspect of wealth management, which oftentimes is overlooked but paramount to your success: risk management, and more specifically, protecting against the loss of your earned income due to a disability. Why is this important? Well, I can't think of anything else as valuable to protect as your greatest asset: your income. Without it, how would you survive? Although many put more value on their car or their home or even their retirement account, your lifetime earnings is your greatest asset. So I ask, why wouldn't you do everything you could to protect it? The most important point isn't the total you may have made, but what those earnings through the years provide: food, housing, a car, medical needs, vacations, and your future retirement savings. Without an earned income, how will you afford the things you enjoy, let alone the necessities in life? If you have sufficient savings, which is always recommended, this may get you by for a short period of time. But what if your financial need is greater or lasts longer than you expected? The loss of one's income over their working life can be even more financially devastating. Most people recognize that no matter how much they have, an unexpected and unfortunate event can materially impact and derail their best laid plans, and some are more consequential and likely than others. So how do we protect ourselves against things we can't control and mitigate the financial impact of unforeseen events? For example, we have health insurance to help pay for medical expenses if incurred. We insure our cars and homes against the possibility of damage, and many buy life insurance to provide for loved ones in the event of their premature death. But what about protecting against the possible loss of our greatest asset? That's where disability insurance comes into play. According to the Social Security Administration, more than 1 in 4 20-year-olds will experience a disability for 90 days or more before they reach 67. And that probability only increases as we age. Of course, no one thinks it will ever happen to them, but it does, and more frequently than we realize. And I'm not referring to worst-case scenarios such as rare birth defects and horrific accidents leading to paralysis or amputations. In fact, 90% of disability benefit claims stem from medical illnesses and not physical injuries. While fractures, sprains, and strains of muscles and ligaments can be disabling, the most common causes are arthritis, back pain, cancer, depression, diabetes, heart disease, and stroke. Just consider what would happen if you suffer a heart attack. You wouldn't be able to collect workers' compensation if it didn't happen as a result of your job. Workers' compensation only applies if you become sick or hurt while performing the duties of your job. According to the Bureau of Labor Statistics, only 1% of American workers missed work due to an occupational injury or illness this past year. So you shouldn't rely solely on workers' compensation to protect your income. And you may not qualify for government disability benefits either. Social Security Disability Insurance, also referred to as SSDI, pays benefits in the event a disability prevents you from working. However, these benefits are the most difficult to qualify for. Here are some of the requirements. You must be unable to work for a year or more because of a disability. You must have a condition that significantly limits your ability to do basic activities such as lifting, standing, walking, sitting, and remembering. You generally will not be considered disabled if you work and earn more than $1,220 per month. If you are not working, Social Security will consider whether you can work. And if you can, even if it's not the type of job you did before your injury or illness, you will not qualify for SSDI benefits. According to the Social Security Administration, only 34% of SSDI claimants had their applications approved from 2006 to 2015. And even if you do qualify, benefits will likely replace only a small fraction of your income. The average monthly disability benefit in 2019 was $1,234. Needless to say, this isn't something I would base my future income planning on. That means without disability insurance, you would have no source of earned income while you recover. And the same would be true if you were injured in an accident. So how do you go about getting disability insurance? You can obtain disability insurance personally and/or through group coverage if your employer offers such. Individual disability insurance requires underwriting, and the cost is based on your age, health, occupation, waiting period, and benefit period, the benefit amount, and any additional features you choose. In this realm, there are two main plan options available: non-cancelable and guaranteed renewable or guaranteed renewable contracts. With a non-cancelable and guaranteed renewable plan, the benefits and riders can't be changed or altered prior to the maturity date of the policy. Additionally, premiums will never increase if your premiums are paid on time. The premium for this type of coverage usually costs more than a guaranteed renewable plan, which is a lower cost option. The benefits and riders of this policy can't be changed or altered prior to maturity date either. However, premiums are subject to rate increases. Purchasing this type policy in your younger years may mean you face a greater risk of potential premium increases the longer you own a guaranteed renewable policy. Regardless of the type of contract, if you pay the premiums personally, benefits are income tax free. And individual plans are portable, meaning you don't lose your coverage if you change jobs or lose employment. Group disability insurance, however, is offered on a guaranteed issue basis. But the benefit and features may be limited, and your benefit will be taxable if your employer pays the premium. Also keep in mind that there's no guarantee your employer will maintain such coverage, and you will lose it if you are no longer employed. So while the group plan, if available, may be cheaper and easier to obtain, individual coverage is typically stronger and more reliable. In either case, having some in any form is better than not having it at all. When thinking about your finances and what you would do if disabled and unable to work, consider the following. How much income do you need to maintain your lifestyle, if not just to cover your necessities? How long could you wait before you start receiving benefits? Do you have sufficient funds aside to cover a short period of time like 30, 60, or 90 days, or even a year? Longer waiting periods do offer lesser premiums. How long would you want the benefit to last? Some occupations are only offered limited periods, like 5 years, whereas others may extend to age 70. The longer the benefit period, the higher the premium will be. How would you like disability defined in your contract? Would you want it to cover your occupation specifically, or any gainful employment? The more liberal the definition, the less costly the premium will be. Do you want a portion of your benefit if you are only partially disabled? And would you like to have your benefit amount adjusted for the cost of living? Would you like to be able to increase your benefit without future underrating? All of these factors come into play when trying to determine your best course of action and seeking proper disability insurance. Remember, wealth management consists of the accrual, preservation, and ultimately the distribution of one's wealth during your lifetime or thereafter. And the probability of successful wealth management is increased by protecting it all along the way. Plain and simple, insurance is protection. And having the proper insurance can allow your other plans to stay better intact for their intended purpose. Consider how you would make ends meet if you were unable to earn a living due to a disability. As I mentioned earlier, I strongly recommend you review your finances and your reliance on your income. Then talk to us about disability insurance. We'll be happy to help. Thank you.